From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 3rd, 2016. In today's video, we're going to be taking a look at the USDCHF, the US dollar, versus the Swiss franc for today's trade analysis. We're going to start here on the daily time frame. We've seen several different trends over the past several months. Going all the way back to October, we saw the previous uptrend on the left-hand side of the chart. Then it made a significant fall as the market fell from all the way up here into the 1.0300s back down into the 9800s. And then for a period of time, we went into a rising channel as it continued to rise back higher, and then a dramatic sell-off as it went once again back from the 1.0200s all the way back down into the 9700 level. Now, over the past several weeks, we've been in a rising move again. We can see the little short uptrend blue trend line here that we've been in for the past 2 or 3 weeks. What's interesting about that today is that we see the market coming back down to challenge that trend line. But there's other things in here that we can recognize as potential support into this area. Not only do we have the rising trend line, we also have the 100 period simple moving average coming into play here. I think what's interesting about this is the fact that several days ago or last week we saw the market finding resistance underneath that moving average for quite a few days, finding resistance underneath it. The last time we found support on top of that moving average was all the way back here in December, where it found support and began that upward facing channel here in the middle of the chart. Well, here on the right hand side in the current market, we see it now. Over the past 3 days, we opened and closed, stayed above that 100 period moving average, and now we're coming back to test the top side of that moving average once again. Not only that, we have a couple of fibs. Let me go ahead and zoom it in a little bit here. We have Fibonacci from the highest high down to the lowest low, and we have Fibonacci from the lowest low to the current resistance high. What's interesting about that is we find some Fibonacci overlapping at the top of this green shaded area right around the 99.50 level. So coming back down here also not only touches the trend line, but touches the moving average, but touches Fibonacci retracement levels as well. 50% of this previous downtrend, we're just sitting on top of that. 236 of this current uptrend, we're sitting on top of that. So all of that implies that we're looking at Fibonacci support here, right around 99.50. We have the moving average, we have the trend line. We also look back in time. We see, of course, the historical resistance here, the support over here on the left-hand side, the resistance over here on the far left-hand side around the green shaded area between 99.15 and 99.50. So we know historically this green shaded area has been a support and resistance and congestion zone for the market. We see that it's a significant price level. That barrier of 9950, that 50 level in the market, becomes somewhat of a psychological barrier. We see the trend line, moving average, and Fibonacci, all of that implying, and as we gather the evidence in the market, it implies that we're looking at support here for the day for the US franc. Of course, over the next day or so, well, over the next 24 hours, we have significant news, a little bit more than 24 hours. Let's say 25 hours. We have significant news in the market. Today, we have some news for the US, but probably most importantly, tomorrow, we have non-farm payrolls coming out of the US. If it's a significantly positive number for the US, we will definitely look for this rise out of the US franc. If it's a negative number, of course, we would look for it to go back down, and we need to use appropriate risk strategies. So for the day today, I'm looking for buying opportunities into the green zone. Risk is underneath the 99.15 level. That way, if it breaks underneath it, I get out. I look for another new opportunity for the US franc. So here we are. I'm looking for a buy. I'm already in it. 99.45 is where my entry is. It just dipped into the green zone, giving me an opportunity to get in at 99.45. So I took it, and now I'm in it looking for it to go back higher. I have about a 45 pip stop loss on the trade, so that puts my stop loss right at the 9900 level, and I'll be looking for it to target different levels higher. The pink shaded area, of course, has held as resistance. That's also that parity 1.0 level there into the pink zone. That becomes our first target on the way back higher. So from 99.50, you're targeting about 50 pips higher into the pink shaded area. But if it can get through there, the next target higher, we discussed this in the trade room yesterday, would be up here towards the 1.0050, 70 level, the blue shaded area. And any further than that, we might even see it all the way back up here to the yellow zone. If I zoom out one more time here on the daily chart, take a look. That red trend line coming across the last two highs here on the daily time frame, that puts that red trend line all the way up there into the 1.1s as a pretty significant target higher if we get that positive movement for the US dollar. Again, negative movement, negative information for the US dollar likely sees us break down this blue trend line and continue to go lower. But I think the evidence today points to support and a possibility of buying here for the US franc today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.